How are you doing? This is David W. Williams, also known as Diamond Dave, the founder of the highest paid part-time job in the world options trading course. And what we're going to talk about is how not to lose all your gains by overtrading. And this is going to be a really good video for people that first want to understand one, and I'm going to talk about two things. If you're in a run of success, right, how not to lose all your gains, because what happens to a lot of people is they go on a run of success. And then what happens is over time, they essentially give all of those gains back to the market. And this is one of the reasons why options trading or trading in general gets a negative reputation. And then also the person that is maybe in a rut and they can't figure out how to get out of that. So we're going to kind of cover both of those in the same video. And this is not going to be investment advice. However, an investment advisor can teach you how to trade in and out of the market, right? I have an experience doing that. I've been able to be successful in teaching that to other people. So we want to understand is that I can't give investment advice, but I'm not teaching you how to invest. I'm teaching you how to trade. But we're just going to use it as kind of like a colloquialism to get you to understand that, you know, what I'm telling you is based on my own perspective. It's based on what I've been successful with in the past. It's based on what I've been successful in teaching other people, and they've been successful in the application of it. However, it's something that you want to make sure that you do your due diligence with, something that you make sure that you want to test, you want to back test, and understand that the only secret, right, to being successful as a trader, right, is your own psychology. It's not any strategy or any particular process. It's you. And the reason why most people struggle is because they don't want to learn the secret of mastering themselves. They're trying to learn the secret of mastering something that is external to them, right? So then therefore they can place the blame on something that is external. What I really want to encourage you is really learn the secret of mastering you. And then once you learn the secret of mastering you, then you'll learn that all of these other external things are arbitrary till you have a mastery over yourself. Now, really quickly, I want to give you the banner for the sponsor of the show. That is going to be www.highestpaid.online. That is an options trading academy that we created to solve the problem of three people in our society. That's a person that works a 9 to 5 to dissatisfied with the amount of money that they make, right? That's also the person that is upset because they're upset because the fact that they don't feel like they feel like they take too much time away from their particular family to make the money that they have. And also the person that feels like there's a ceiling over the top of their head and it doesn't allow them to make more money. And so what we've been able to do is figure out how to solve that problem for those particular people in the society, right? And so if you are faced with those particular issues, I want to tell you to go ahead and go into the course, you know, look at what we're offering, look at some of our testimonials, and ask yourself, are you willing to put the time in and do the work and apply yourself in this particular area to make yourself successful? To give people a heads up, as I tell most people, and I'll probably talk about this on another video, give yourself 2 years in this market. And we're probably also going to talk about this here. And I think a lot of people have this easy bake oven mentality for success. And it kind of determines how much work they think they should put in to get the success that they desire. And the question I would ask you is that if the work that you need to invest, not just the money, but the time that you need to invest in getting success that you desire, if it's not really worth the time, then how much is the success worth to you? And I think that's something that people really should examine. But let's go ahead and get into this particular broadcast. So what we're talking about is how not to lose all your gains by overtrading. And one of the things that I've dealt with as a trader is to where my account would do this. It was always going up and down. And one of the biggest issues is that I couldn't figure out right why it was doing that, because I would get this run of really, really success in the market. And then what happened is I would give it all back. And I would give this run of really, really successful in the market. And then I would give it all back. And the biggest challenge was that I couldn't figure out right how to get a long-term run in the market. And I needed to figure this out, because then all I was doing was just recycling my money back into the market. So what was happening was that the market was just letting me borrow the money for a certain amount of time, and then I was just giving it all back. And that's what a lot of people deal with, especially initially when they come into the market. A lot of times what they do is they have a short-term success. You know, they learn about options, they understand the leverage in the space, they start realizing that they can be successful, and they have a short-term success in the market. And then what they do is that they give all that money back to the market, and then they can never get back there again. And we see this with a lot of people in life where they can go into a space. Initially, it becomes easy for them. They have a level of success. They hit a wall, and they never figure out how to get past that wall. And so what happens is they just stay in that wall the rest of their life. And you see this with people happen in multiple professional fields. You know, they never figured out how to get past this particular level of success. So they just stay trapped in that box the rest of their life. And so one of the things I wanted to figure out how to do was that I need to figure out how to solve this problem so I can have long-term success. I didn't want to be a person to where I knew I could make 20 grand in the market, but over the course of the year, I would give it all back. Or I can make 30 grand and over the course of the year, I give it all back. How do I make money? How do I make money in the market and keep the particular money? Right. And so that's something I had to figure out. And one of the ways in which I really understood is that when a trader is most vulnerable is right after they have a big success. Therefore, whatever success is to you from a monetary standpoint, it could be $1,000, it could be $500, it could be $100, but whatever you perceive to be a big success for you, right after you have that success is where you're most vulnerable. And one of the ways in which I learned to defeat that particular vulnerability is I don't trade. So therefore, if I have a large amount of success, right, I don't trade for a certain amount of time because I'm at a euphoric point emotionally. And what I want to do is I want to come off that euphoria, right? And so then what I don't do is by doing that, I don't make trades based on being euphoric because I'm not going to trade. And I think that's something that a lot of people should consider, to where if you set this goal or a milestone to where I want to, hit this particular mark from a financial standpoint, once you hit that mark, then the question is, do we need to take time off to kind of let your emotions come down? Because many people have lost money in this market because they go into it, they go on a run, right? And then as a result, they, after that run that they go on, they give it all back because they are on this euphoria, and then they can't figure out how to get the run back. And then what they do now is they go through even more money trying to get back to where they was at. And one of the reasons what they're doing is they're chasing a high. So they had a big success in the market. They were at this euphoric peak. And then what they do now is they give that back, right? They give it back to the market. And then what they're now doing is they're chasing that euphoric peak again. And they can't figure out how to get back there. And that's one of the biggest challenges a lot of people have. And one way in which you avoid that is you just don't trade, right? Just say, hey, man, I'm going to take off 5 days. I'm going to take off a day. I'm going to take off a week. And then you may consider rewarding yourself with something, maybe a meal, maybe something that you can reward yourself for that. But what you're not doing is going back in the market and looking to get that high again out of the market. And that's something that a lot of people got to be careful of, because if you start using the market as a place to try to catch a high, you're going to get caught in a pattern to where it's not going to be about getting the success out of the market to serve a bigger purpose. It's just going to be about chasing that high. And that's why, a certain amount of people that go to Vegas, they're addicted to gambling. It's not about the money with them. They're addicted to the process of gambling. And they're addicted to the anticipation. And that's something that we could go into a lot deeper in a different conversation. But most people are addicted to the anticipation of gambling. The actual gamble, the actual winnings, that doesn't mean anything to them. So it's a letdown once the anticipation is over, whether they win $1 million or lose $1 million. That's a letdown to them, because what's really the high is the build up to the actual gambling. And that's what a lot of people got to understand. So you don't want to chase that, because then you're going to be like the millions of people that are in the market that are chasing a high in the market. And the only reason they're there is to get their high out of the market, right? I don't want to encourage people to use the market to get that high working out, get that high doing, public service in your community, get that high being a father or a mother in your family, get that high being a husband or a wife. But don't look to get your high out of the market, because the market is a bad place to get a high out of, because it'll take you on these emotional swings. And that's what a lot of people get caught into. So the first thing you want to do is consider not trading after you have a really big win. Second thing, if you have a really big loss, do the same thing. Consider not trading, because what can happen is you can end up chasing, right, that scenario. What do I mean? I've lost a lot of money in the market. Now I got to get all my money back, right? So now what we call revenge trading. So let me see, can I go in the market and get all my money back out of the market that I just lost? Then what do you start doing? You start taking bigger and bigger risks, because you're trying to make up for what you lost, right? And many times it exposes the fact that you're not trading off of a system. So then therefore, because I'm not trading off of a system, I now don't have any rules to break anything, because the only reason I'm here is to get this emotional high. And so now I can get the emotional high from losing. the same way I can get it from winning. That's how most people get in trouble by being gamblers. Is their high is not from winning. Their high is from gambling. So whether they win or lose, they're still serving their high. And people that actually really understand the narcotics industry, any drug that's sold that has an addictive quality to it, it's never about the drug. It's about the high. Nobody cares about drugs. They care about getting high. So you got to really watch yourself to where if you're chasing this dopamine or serotonin or whatever chemical that you're chasing, what are you using to chase it? Because if you start using the market to chase it, you can get addicted to that. And then it doesn't become about using the market to try to leverage that to get the life that you want. Is I'm just chasing this dopamine. I'm chasing this serotonin. There's another drug that your body produces that you start to chase just to try to get that high, right? So first thing is quit or not quit. Decide to kind of suspend your trading for a certain amount of time, whether you're very successful or also if you have a really, really big loss, right? And that's how you don't overtrade. Second thing, and this is something I talk about in the VIP course, but I also have a standalone course. Consider a trading plan. Now, why is a trading plan very important? Because you now have a structure in which you're trading in, right? Many people are just taking trades for no reason. The question I need to ask is that, does that particular trade fit into your structure, right? And so it's just like, we're going to go build a house. Well, we would not build a house without plans, right? We wouldn't just show up at the site and just start building. We have plans so that we build to the plan. Or we wouldn't show up at a football game without a game plan, right? Nobody shows up at a football game and just starts calling plays, right? They game plan all week to get to the game. However, many people take trades with no structure around what they're trading. So one of the ways in which you avoid overtrading is you have a structure. So how many trades do you think you're going to take this month? Do you know? How many trades you think you're going to take over the next 90 days? Do you know? Many people can't tell you that. Then I have it to where I have a certain number of trades that I know I'm going to take. Then I have what I call casino trades. And I talked about this on my private video. I think last Sunday, where I have casino trades, which are trades I really don't know a lot about. I'm not really up to date on the scenario, but it fulfills that urge for me to just put money on something that I think might hit, and then I limit how much I do. But I would encourage everybody, whether you buy my course or you buy my trading plan, to create a set number of trades that you're going to take over a certain amount of time and have enough confidence in your ability and enough confidence in the market to where you don't start over trading thinking that you're going to miss out. The reason why you have a lot of these big runs in the options market is because the market will take a trend. Retail, like most retail, they don't study to really market. They just try to follow the leader. So what happens is the market takes a trend. The smart money makes money on the trend because they see where the market is going. Then retail and, also some institutions also who are late to the ball, late to the game, they now follow the trend. So what we saw early this year is that we had a lot of bearish activity. Then once we had the little bearish activity, a lot of people started buying a lot of put contracts. Well, you're kind of late to the party now because the bearish activity has already happened. But what happens is now is that I run behind the activity, right? And even though it wasn't my plan to do this, I run behind the activity, even though it wasn't my plan. I'm now in this environment and I still don't have a plan. And then I get caught in it when it starts to reverse, right? But I'm not trading off a plan. So if your plan was to, based on how our particular our objectives for this year, based on our objectives for this quarter, we're going to sit out the next 6 weeks. Well, then you sit out the next 6 weeks. A lot of us, because we're so desperate to make money out of the market right now, we take bad trades, right? Because we're so desperate to make money out of the market now because we haven't made our situation important until we got desperate. So that now we take bad trades out of desperation because we need things to happen for us real fast. And I want to really encourage you is that if you could be really deliberate around what you're doing, it can put you in a position to be more successful long-term and plan out your trades, right? And so I'm the kind of person to where I catch the open every morning, whether I'm going to trade that day or not. right? Because I got into the habit of doing that. I got into the habit of studying the market for like 3 hours on Sunday, even if I know because of the way my account's set up, it's very unlikely I'm going to take a trade. But I just go through that same process all the time. Why? So I can understand what's going on in this particular space. So I really want to encourage people is to understand that a plan or a strategy could put you in the best position to be successful. And can you sometimes change it? Yeah, but you came in with something. Most people are coming in with nothing. So I know why so many people fail at trading is because, one, they're taught to do something without a structure around it, right? But many people operate their life without any structure. They got to be told a structure by somebody else. But the question is, what is their structure? They don't have one. So it's just how I feel that day. Or what is everybody else doing? The question is, what have you decided you're going to do based on what's going to help you get to your objective? But the question is, what is your objective? Right? So that's another thing. So we talked about not trading. We also talked about a trading plan. So here's another thing the way you can do when you don't overtrade, right? Is you got to really watch your position size, right? So a lot of times people, they take too large of a position size initially as a novice trader, right? And the problem is that if the trade go against you, it'll wipe out your account, right? And so because of, like we talked about before, either they don't know or they're trying to get somewhere really fast. Instead of them buying one contract, they buying 5 or they buying 10. Well, the problem is that, yeah, you'll make a lot of money, but you'll also lose a lot of money. You need to be, in my opinion, very seasoned to start increasing your position size. That's why I tell people, worry about your percentage first, then worry about your position size, right? Most people are trying to get somewhere really fast, so they increase their position size trying to get somewhere. Like I said, you can win big, you can lose big. And that's why I want to encourage people is to don't overtrade by position size and take too large of a position until you get seasoning and you get a lot better at exiting a position when you know that you've taken losses, because it's a bigger deal to lose 20% of $1,000 than to lose 20% of $10,000. Therefore, if you haven't learned how to exit and enter properly, which is what everybody seems to have an issue with, and I'm not saying they shouldn't have an issue with, but it's something that a lot of people struggle with. But then you raise your position size up when you still have that same problem with just a larger position size. And so that's one of the ways in which you can get over trading, right? And so it's really those three things. Another thing that I would add on to the back end is that just really watch the amount per contract. I spoke to a woman a few days ago, and she told me that, when she first started trading, she was trading bond contracts for $900. And that's a lot of money for a novice trader. I tell people over and over again, when I first started trading, I was trading bank contracts for $40 and $50 and maybe $70. I refused a lot of $200 contracts because to me, they were too expensive. It was a long time before I put $1,000 on a contract. Like I was probably like almost 2 years into the game. And that's what I want people to understand is that, don't feel bad about taking small trades, because that's how you're going to learn how to trade. You're going to develop your style. You're going to develop your strategy. You can always increase your size. The market will always take the trade, right? They'll always take the trade. They'll take the trade on options trades that don't have any liquidity on it. They'll take the trade at the ask, right? However, because I want you to have longevity in this game, really watch initially as a novice trader how much you're paying to get into these particular scenarios, because that's a form of overtrading to where I'm trying to buy a more expensive contract because I want faster results. But I'm not 100% sure about what I'm doing. People come into this space and they want to trade Tesla. Tesla contracts are not as expensive as they used to be, but Tesla in the money, at the money contracts at any kind of theta used to be very, very expensive. But people want to trade Tesla because it's a hot stock. The question is where you're at right now in your career as a trader. It doesn't mean Tesla's the best place for you. You may have to learn some things before you can trade Tesla. And that's what I want people to understand. I tell people, and I'm going to keep repeating this, if we can act on something before we get desperate, it puts us in a situation to where we have more runway to learn what we need to learn before the situation becomes immediate. A lot of it, because of how we've been conditioned, a lot of our experiences, we don't act until we're desperate. And then we're trying to make things happen for us very fast, which means what? We take on a lot more risk, right? Which puts us in a position to have a much bigger downfall if things don't go the way we want them to go. right? And that's that scenario. Now, what we're also going to talk about is if you're in a slump, okay? And I got the banners for that. So if you're in a slump, let's say you're having a run of bad trades, you can't figure it out, right? So the first thing we're going to ask is, do you have a plan? And we're going to repeat that also. Do you have a plan? You're in a slump. Things aren't going the way you wanted to go. The question I want to ask you is that, are you trading on your plan? Right? What is your plan to trade? Can you explain it? Right? Can you communicate what your trading plan is? What is your strategy over the next month? What is your strategy over the next 90 days? What, don't necessarily, you may not necessarily want to look at income, but what is your strategy? What are you doing? What are you trying to accomplish in the market? Right? What tickers are you looking at? What indexes are you looking at? What trends are you following? What's your plan? And I'm going to repeat this. The reason why, in my opinion, so many people fail at day trading is they wake up in the morning without any plan and they compose their plan within the first hour of the market. Not enough time. You need to come into the market knowing what you're looking at, right? So I made a trade on Friday on a ticker I had been looking at for the past 6 months. And I said, well, if this ticker does that, I'm going to enter here. Because I'd already made my mind up. That's what I was going to do. So I was just waiting for it to do it. And it showed me that activity on Thursday. It showed me that activity on Friday. And I got into it, let's say mid-afternoon on Friday. Right? But I had been looking at that ticker. And so what I want people to understand is that it's hard to reverse something when you don't have anything you're operating under. Right? So the question is, first, your plan. Next thing is that you may want to make your trades even smaller. So if you're struggling and you're trading at a certain level, what you may want to do is make your trades even smaller and kind of contract some of your trades and either take smaller positions or trade a smaller contract. Now, if you can't trade a smaller contract, can you take a smaller position? Because if you don't have your confidence, and you decide, well, I do want to trade until you get your confidence back, it may make more sense to trade small. Right? Because you may only be trading at a certain level because you're euphoric. And everybody thinks they got to trade big to be successful in this market. And what I want people to understand is that you need to be more worried about long-term longevity than the one-time scenario. Because a lot of them people that made money off the meme plays, they can't figure this market out. Why? Because they don't know how to trade. So if they didn't make millions of dollars off GME and AMC when it blew up this time last year, they can't figure this market out. Why? Because they don't know how to trade, right? And that's what I want people to really understand. So maybe consider taking down your position size or taking down the number of the contract that you're buying or the number of whatever you're buying, a future, whatever, cryptocurrency. Take that down until you feel like you got your feet back under you. Next thing you want to do, risk less, right? So what risk are you at? Maybe you should risk less. So it also kind of buys into trading small. Right? And this is another way until you figure that I have a plan or a strategy that I know is working for me. This can allow you to save some of your capital by risking less. Most people, in my opinion, are taking a position size too big based on where they're at right now in their trading journey. Right? Because they're trying to get somewhere very fast. And I just think it's going to be difficult to absorb those losses over time. So you can win big. But if you're not trading off of a real strong strategy and your position size is too big based on what you're doing, you're also going to lose big. Okay. Next thing, take less trades. So you have a trading plan that says, I'm going to do 6 trades over the next 90 days. Right. And I'm not, things aren't going well for me. Maybe bring that 6 down to 4 and see how that works. Now you got more time to study what you're trying to do. You can always bring it back up, but don't be scared to move your plan, right? They do this in firms all the time. The plan evolves based around what's going on in the market. However, we came in with a plan, right? But many people, they are trying to hit certain objectives in the market. And then when they're losing, what they do now is they double down on what they're doing wrong, as opposed to pulling back and saying, well, you know what? Maybe I need to take less trades and reevaluate what I'm doing and try to figure out how to give yourself more time, because the most important thing as a manager of capital is that you're managing the capital property, right? Next thing we want to talk about is focus on your strategy. That's still the most important thing. Whether you win or lose on a trade, you need to look at your strategy all the time. Most of us are going to lose because we don't exit at a loss. That's how most of us going to lose. We don't exit at a loss, and we don't exit when we hit profit. That's how most of us lose. We have a scenario where we've lost over our percentage, over our stop, and we stay in the trade thinking it's going to turn around. Now, we don't really have a good idea it's going to turn around. We just wanted to turn around because we're in this trade, right? So I wanted to turn around because I'm in the trade, or losing in this trade may be more exciting than winning the trade because I'm not really here to make money. I'm really here for the dopamine rush, right? And that's one of the reasons why a lot of us have issues in this market is that we're not following our strategy, right? Even if we set one. So we lose profits and we take on more risk and we lose more money on a loss because we haven't decided I'm going to take 30% on the top side. I'm willing to lose 15%, right? Because we'll see a scenario to where I exit and the play will turn around. And I'm thinking, well, if I just stayed in it, I could have been successful. We also could have lost one if it kept going down. The question is, do you know why it turned around? Or did it just turn around and you're not even aware of why it took place? So do you have a narrative of why the situation reversed itself once you left? And these things have happened. However, when you understand is that the market's going to always be here, one play in most scenarios will not make you or break you. Therefore, you shouldn't trip on one play. You should trip on long term, right? How can I string together a long-term path of success, right? And the next thing we talked about in the first segment is sometimes you just got to take a break. If you're on a long string of losses, just take a break. Take a month off. Some of the biggest mistakes I had, I think it was like 2 years ago. I was getting killed all September. Early in September, I should have took the rest of the month off. I kept trading, trying to trade through it, and I kept losing money. And I lost a lot of money that September trying to trade through it because that market was new to me. I had not seen that kind of market before with that kind of volatility. And I really didn't have my feet up under me. And I took a lot of, I was listening to what other people was telling me about stuff. And I took on those trades. I kept losing money. And I should have just pulled everything out of the market and sat back and let that volatility pass over. And then came back in at a later date, right? Because normally the market runs around December, then sells off again in January. But I didn't want to do that. I so much wanted to be involved in the space. I tried to trade through it. And there was no reason for me to do that. I should have watched and managed my capital a lot better than that. But I learned from that. So sometimes I don't trade at all that week because it doesn't fit my trading plan. But what I do, unless I got some appointment that I have to go to that I can't attend it, I always catch the first hour to open. And I always spend 2 to 3 hours on Sunday studying the market. Now, I may do more than that, but that's going to be the baseline minimum, right? Because my attitude is I have to invest in the space if I want the space to return, give a dividend or give a yield back to me. And so that's pretty much going to be this video. I appreciate everybody for coming through and contributing. If you got any questions, hit me up in the comments and we're going to go through that and we're going to get up on out of here. So Epic, I heard dividends only pay 5 to 10%. That's going to be relative to the actual ticker. How much did the average person put in stocks? I don't know who the average person is. So it'll be case by case scenario. So what are your financial objectives in the future? I think that can kind of determine on what you want to do. But I couldn't give you like a general answer for your specific situation. Right? So LRT says, I plan so that we can return. See, I'm saying I feel you. And so I can respect that. So you gotta, you study, you do your thing, but you trade once a month, and that's what works for you. So I get that. And I think that's a lot of times the issue is that we've created this narrative on the internet that you can just jump into this space and you don't have to invest in the space. It's going to be successful for you. It's very difficult, but a lot of it is the marketing, LRT, because I saw those guys that was, I know you know about Turo. Everybody knows about Turo now. They was getting the Turo cars and they was living in apartments, but taking like photo shots with the Turo cars and getting people to believe that they was big time Forex traders. And so people think that's all this is. Like, I don't have to put the work in. And I want them, people to really understand is that like in any space, you got to apply yourself to become successful. And then you got to deal with the trials and tribulations of the situation that you're trying to become successful in. So I respect that, you constantly study, but you only trade once a month. Because one of the things I really try to get people to understand is that, 30 minutes a day of reading about the markets can change your life over the next 6 months to a year, because now you become more informed over this particular space. And you start to see through a lot of the BS, because the financial markets run the world, not the politicians, not these entertainers. The financial markets run the world. So what's going on in the financial markets is what's really best for the markets is going to determine what direction this world goes in. And if we can wrap our head around that, it'll change our perception of the world, because we'll start to understand why what's going on in the world is taking place. And then we can kind of understand how we need to move. But big up for you doing that study. Yeah, definitely. If you keep missing on big contracts, you'll turn $20,000 into $0 in 90 days, because you keep missing on big contracts. And I think a lot of people would be better served if they bring their contract size down until they don't feel like they're novices in the game, because the money's going to always be in the market. In fact, there's going to be more money in the market next year than there is this year. And because, we know how to trade both sides of the market, even if it's a bear market, we still know how to get money out of it. It don't matter what direction it goes. I just don't need it to go neutral. Therefore, the market's never going to run out of money. There shouldn't be a rush. I understand people want to do things within their own time plan, but a lot of people are trying to get somewhere too fast. And this market a lot of times punishes you for that. Because even if you hit big, if you don't know why you got there, you can't maintain it. Yeah, you get whipsaw, but that's going to happen. You know what I'm saying? That's going to happen. But I think Geechee Dan, a lot of people, they stick to their trading plan. It'll serve them better long term. Like I tell people about earnings. You can trade earnings, but most people don't track earnings over a year. Like I traded every earnings for a year. Was I positive and negative? So you can blow up on an earnings play, but a lot of times earnings is so volatile and you don't know how the market's going to react to it. I would trade earnings if I got contracts that go past earnings, but I'm not a fan of buying weeklies for earnings. It's just, to me, it's too much of a crapshoot, right? It could go real big. It could also blow up in your face. At a legendary losing streak, yeah, that can happen. Sometimes we just need to sit out and just kick back after a big win. I tell people, go reward themselves, go buy them something nice to eat, maybe take a trip if it was that big of a win, and just kick back and let that euphoria come back. So now you go back to looking at the market from an analytical standpoint as of just being hyped up. Because in this market, this thing could turn around on you at any moment. And a lot of us, based on what kind of setup psychologically, we may start getting deluded and thinking that we're better than what we are. And there's so many competing forces in the market. Unless you're Goldman Sachs or you're JP Morgan or somebody like that, you can't really make this market go the way you want it to go, right? And I think that's something that we struggle with, where we got to just accept that, we don't have to be right all the time. We just got to be right some of the time and manage the risk of being wrong. And once people really accept that, I think they can make a lot of money in this market. But a lot of us, we come from a standpoint of, I got to be right all the time. It's like an ego thing. In this market, you don't have to be right all the time. You don't have to be right the majority of the time. You just got to manage your risk really well when you're wrong. And then you can let the fact that you won 20% of the time, that can maintain the 80% that you lost. But people think it got to be vice versa. It don't always work like that. Yeah, that's a good experience. I had that same issue. During the pandemic, I was hitting like big plays. And I got into the habit of think that everything got to be a big play. And I didn't want to take like 25, 30% wins. And so I got kind of spoiled by that. And I had to retrain myself that 30% in the market is a great win. Hell, 25% in the market is a great win. But I was coming out of the pandemic where we was hitting for like 600% on every trade because we was positioned for it. But you get that. A lot of times people get that in GC. What happens is they hit big or like 1K and they think, well, I'm going to hit 1K every time. And it may not go like that, but that's their expectation. And then once that don't work and they run through their account, they just leave the market because they really want to just hit 1K every time because of the high you're doing that. And that can be hard. It can be hard to be a home run hitter in baseball every time at bat. Let me get down here. Okay, great deal. Yeah, just stay on top of those three companies. I would suggest to you, and get really good at that. Because actually, once you get a process to study a company, over time it'll get easier and easier for you to learn about a company because you got a process. So a lot of times when we first start studying a company, it takes a long time because we new to it. But then once we develop our process and we get experienced with it, you can learn. I can look at a company now and learn everything I need to learn about them in like a week. But I've been doing this a long time, right? And I wouldn't say I'm an expert on it, but I know enough about it to where I'm comfortable trading it because I know what to look at from my standpoint. That I'm getting ready to try to. I had a guy that I was supposed to do research for me. I got to get back with him because I got to kind of teach him what I want him to pull on a company. So that's what I'm gonna try to do next, is to have somebody with me that researches, and then I can get research from them, but I need to make sure they give me what I need to know because I got to have confidence that they're looking at what I need to look at. That'll save me a lot of time. Yeah, I mean, I don't think the market plays fair for anybody. I think this perception is that there's a perception that I think that the large firms are competing with each other, and they are. I mean, that's why AIG and Lehman got their ass handed to them in like 07, 08. This is not about playing fair. It's about making money. It's about controlling the market, making the market go the way you want it to go. And so I think a lot of retailers really don't understand their position in the market and don't understand like what they have to do to be successful. And they worry about like this stuff, Gary Gensler is going to make the market fair for them. That's not what this market is about. It's just not about that. No market is fair. It's not fair, and I'm going to kind of talk about this later, is that the United States created economic sanctions against Russia, and then now the United States is telling Europe, well, we can provide your gas needs through American providers. Well, Russia's not a retailer. They're a major country. They're nuclear power. They're not a retailer. But to me, what happened to them was not fair, but it happened to them, right? So I just think we have to, and I'm going to say this, and I don't want people to take this the wrong way. I look at the Anglo-Saxons that are controlling the society, right? I look at how they move. I look at their systems that they built. I don't worry about the Anglo-Saxons that are unsuccessful in this society and buy into their narratives. Why? Because they're not even successful Anglo-Saxons. So they're kept outside of the money pool. And so I'm not trying to join their club because I don't understand how you're an Anglo-Saxon in this society and you can't figure out how to win. So I definitely don't want to join your club. And I think they're the ones that are pushing a lot of this narrative that the market is so unfair, yada, 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 because it kind of taps into the fact that we're Anglo-Saxons and we haven't been able to figure out how to be successful in this economy. Therefore, it has to be unfair, right? Well, in reality, that's not how this was ever set up. But they think they should be winning because of just who they are. I don't want to deal with those guys. So I never came into the market with the perception that, well, it's not fair for retailers. It was never designed to be fair. It just never was. That's not the design of it. You're right. Just like the world economic system is not designed to be fair. It's not fair that a country can have an issue with the United States, and the United States goes to all its business partners and say, if you do business with this company, you can't do business with us. That's not fair. But the United States does that all the time. I try to look at it like for what it is and to decide whether or not I want to deal with it. And then if I do want to deal with it, how can I get what I want to get out the deal, right? With the least amount of exposure to me that could be detrimental. And then once I'm done with it, then I go do something else. But I never came into this game thinking it was fair. A lot of stuff ain't fair that I've been involved in. Like a lot of it is I'm taking all the risk to get the least amount of benefit. And a lot of people take those deals every day. It ain't fair to me, and I don't want to go on a rant that a person thinks they're going to get wealthy by playing football. They taking all the risk on because you can be injured permanently playing football. But a lot of people think that's how they're going to get wealthy. That's not fair. But I'm from a part of the country where people to make that decision every day. I think maybe later this year, but we got to see how this monetary policy goes. I don't think it's going to work, but we'll see. Yeah, definitely. Yeah, that's 100%. 100%. Yeah, that's 100%. And the IV was how I make money on that. I still got some more contracts on Rivian too. Still got some more contracts on Rivian. They're trading sideways for a little bit, but I don't think that's going to last too much longer. Right? Yeah, that was an easy play. See, GC, this is one of the things that motivates me and the reason why I want to teach people about the markets. Because if you see that play, I'm not talking about you personally, but if a person sees that play and they got $50,000, they could potentially buy at the money puts, right, with a lot of theta and turn that into, 50,000 times 300%. Because they could have bought the same contracts I bought that expired March 18th and got 300% on the contracts and put in 50 grand. And so that's what I want people to understand is it's not about now. If they can invest into it, this is just another lane for them to get money out of, because it's home run hits like this in the market all the time. You just got to build up the capital, right? And I just think people don't really get that. You could do the same thing with 10 grand. You could do the same thing with 20. And to me, that wasn't even a high risk play. Because Rivian had no business being 170, even $100. Now, is there a chance that Amazon comes out of nowhere and says, you know what? We're going to buy 20,000, not 20,000. We'll buy 200,000 Rivian vans. Yeah, that's the risk you got to take. But you take that same risk if you put it into real estate. Now, you take less risk if you put it into an index fund, but you'll never get 300% out of an index fund. So if I took the 50 grand and put it into an index fund, I would never get 300% out of an index fund if I kept that in the index fund the rest of my life. It'll never get that return. And so it's not that you do this exclusively. It's just another tool that you can use in your tool belt because you understand how these markets function. And now you can move in and out of situations. And I don't think we understand that. Hedge funds, they'll put money anywhere to get money because the goal is to get a yield. They don't just try to get a yield the goal is to get a yield. So bonds, whatever I got to do to get a yield, I'm going to do to get a yield. And I don't think we understand that because we just haven't been taught that. And we got to just kind of keep working until we get to that level of understanding. Yeah, Epic, I could. That's a case-to-case scenario. I would tell you to maybe try to hire a financial advisor, and they maybe can give you some insight on that. Because I couldn't tell you if you're making $400,000 or less, should you use? It's going to be case-to-case scenario and what your goals are in the future, right? Okay, good deal, Urban Homesteader. And I gotta email you back. I still got your email. I apologize for being late with that. It's in there. It's just I got a gang of emails to get back to. Yeah, I could respect that. And if the 3 stocks and the 3 cryptos is what's working for you, I would tell you I would encourage you just to stay on that. You can always expand, but it's better to be really solid on 1 or 2 if that's all you got the time to look at, than to try to be really expansive. Because that's why I tell people at least get one company. And like I said, the process of learning one company, once you get that process down, it'll take less time to learn company 2, 3, and 4. But most people don't know one company. I don't trade Facebook like I used to. I know Facebook backwards, forwards, and sideways. And I don't even trade Facebook. I still study Facebook. I know exactly what they're doing, right? Because I made Facebook one of my original Power 5 was like Facebook, Twitter, Snapchat, Visa, and I forgot what 5 was. And so I knew every social media platform that does paid media. I already know what the hell they're doing. I already know exactly what they're doing. So I knew where they were going. Now, Facebook's moving now to this metaverse thing. But a social media platform that sells paid media, I know exactly what's going on inside that company. Like, I know exactly what's going on. Why? I bought so much media on Facebook. I know what they got to do to make that thing work, right? And so it was easy for me to transition in those spaces. And I like Visa, but because before the pandemic, if you look at Visa's chart, it's 5-year. It just kept going up because of how many people use Visa. Visa, MasterCard were great stocks because they just keep going up because of the usage. Now you got Square and these other situations, but you're like, Visa's a monster stock that nobody really talks about because it's a very boring stock, but everybody uses Visa. They're used worldwide. Yeah, stick to it. I would encourage you to stick to it and be willing to play the long game. Right? Be willing to play that long game because what'll happen is you'll find your success will start to accelerate as you get longer in it. But like I said, is that we got to realize a lot of times we make decisions when we're desperate, then it determines we trying to move fast. And I've done that myself. But it can be difficult because sometimes we can't make things happen before they're going to happen. But the goal is to get this to it. First, the goal is to get people to understand how the financial markets can improve their life. The second goal is to get them to start to realize, like, I can use this to solve this problem, but then I may use this to solve this problem. That's why I'm not like an ultimist where you got to do real estate. You can do whatever you want to do, but you understand how to utilize these things to solve your problem. And this is what I was going to get people. I'm going to talk about this on the next video. Urban Homesteader hipping me to decentralized autonomous organizations. I saw it. I was talking to a tech guy. That can be used to solve a problem. But if you're not aware that it even exists, you don't know that that can be used to solve one of your problems. So the goal is to get us to understand that these spaces can be used to solve our problems and not just thinking that we got a problem that can't be solved, right? Because we can solve these problems. We just don't know how to. And it's not this one. Well, you know, you got to be doing this or else you a sucker. I don't mark it like that, but that's me. Everybody different. You know, I come out of a very diverse crew. Everybody do what they do, and I don't do what everybody else does. I feel you. That happens. That happens to a lot of people with the meme stocks. You know, so I'm not, you know, it goes the way it goes. You know, I feel sorry for them people that bought AMC at $40. That's what I'm talking about. You know, we don't see how these hedge funds, you know, they out to kill each other. You know, they do some backdoor deals here, but they also out to kill each other. You know, because they played AIG. And the people that sold, they played AIG. I say that, but I don't want to get into a tirade. Facts. You know, and then they'll cut you out of deals. Because I'm not like that. I'm the kind of person, GC, you might mess with somebody that I don't like. I'm never going to tell you that you can't do that or I don't care. Because that's you. You mess with who you want to mess with because we're not in the game. I don't get this mentality to where if I don't like somebody, you can't like them, else we're not friends. You like who you like, I like who I like. It's whatever. But the U.S. will literally tell people, we're going to cut you out of doing business with us if you do business with Venezuela. Like, how y'all do that? But it's the bully game. You know, the U.S. is a bully, but they act like they're not, but they bully people. They bully a lot. And I tell Americans all the time, one day, man, we're going to have to pay for all this bullying we do to people. Right? You can't bully people forever. Yeah, they trying to find the next Tesla, which is not going to be. Right? It's not going to be another Tesla. And they wasn't big on Tesla 10 years ago. Like, you know, Elon Musk didn't come out of nowhere. He been doing what he been doing for an extended period of time. So now he getting that's why I try to tell people. He had a lot of advantage a lot of people don't have, but the man was consistent for years and years and years, and people don't see that. Everybody see when you blow up. They don't see when you was doing bad and trying to come up. You know what I'm saying? You know, people don't know that Tyler Perry lived in a car. People don't know that, but he did. He lived in a car. So now he on top. But when he was living in that car, they wouldn't even entertain that man. You feel me? So that's the problem with our society is that we never look at the consistency. We see you once the media start talking about you. But, you know, if Rivian wants to do what Tesla did, they may get to what Tesla's at, but it's going to be 10 years down the road. It's not going to be in 2 years. I don't believe that for a second. Yeah, definitely. They got all them different divisions. You know what I'm saying? And that's what people, and then another thing is those firms to do is that, let's say I represent a firm and you represent a firm, they'll sell me a product and then turn right around and trade against it. The same product they just sold me. And I don't think that's why I told people to watch Margin Call, because in Margin Call, at the end of that, where they was trying to unload all that high risk MBSs, they weren't calling retail. They was calling other firms, but they had already identified that MBS put them at too much of a risk. So now they're calling other firms and they're willing to take a loss because their attitude is that we got to get this off our books because we're going to wake up tomorrow and the value of this particular MBS is going to be zero. So we got to come off the books today. So they call up all their contacts at other firms and they unload it, even though they've already decided internally that this stuff has no value. In fact, it's a high risk asset. You feel me? So retail don't have nothing to do with that because retail can't buy that anyway. Now, does it filter down eventually to retail? Yeah, it sure does. It surely does. But that's the game. Yeah, if you can research, but you know, John James, I need somebody that researches either at my level or at a higher level. And I do and I don't know if you watch my video, I know how to actually research companies. You know, so what I don't need is somebody that can't research at my level. So I got a guy that I think I'm gonna be able to work with, but because the goal, Mr. James, is that to be able to bring people on that can research firms and have them give their perspective on the firm. Right? So I want you to understand that. So you don't have to do that, but that is the goal, because we don't have black analysts. But I mean, if you can read a balance sheet, you can analyze a company. It's that easy, right? Then you just give your perspective on the company. So there's no reason why you need to have a degree in finance. You got to have a degree in some quant to be able to look at a balance sheet. That's not how that works. You don't need all of that. Is gentrification strong in Florida? Depends on what part of Florida you're in. Some parts of Florida, there never was no black people living there anyway, so they can't gentrify you. Okay, that's a good deal. Yeah, I just got hip to that from Urban Homestead. I ain't know nothing about it. I want to use that for business, right? Yeah, that's a fact. And we know why that happened too. You know what I'm saying? That's a fact. We know why that happened also. You know, Haitians ain't helping them out. They're not helping their own self out. But, you know, it's hard to fight America, man. They put a lot of pressure on you, like a lot. Yeah, that's a fact. That's a fact. Tesla traded on $100 for like damn near 10 years. You know, nobody was talking about Tesla then, because the first dude I saw that owned one was in 2012. I was playing in a basketball league, and I was playing against a guy that had the red one with the Gulf wing doors. And he told me, he was like, I like the car. It gets like 250 miles to charge. And that's the first time I seen one in real life, right? Before then, I had never seen a Tesla in real life. But Atlanta has a lot of cars you normally wouldn't see in real life, because I never saw an Alpina on the street till I moved to Atlanta. I just only saw them on YouTube. Yeah, you can, what you would call it. If you want to support, you can hit me with the super chat. That's a super chat. So I appreciate the support. It's a great movie, and it gets people to really understand how firms don't care about other firms. Now, do they do sometimes maybe do some back office deals? Yeah, but they also don't care about each other, right? Because the goal is to make money for that firm, right? And then therefore you make money, you know, because you see Kevin Spacey at the end told him, like, we'll give you like $1 million if we can unload all this debt. So you get $1 million bonus. So you got a lot of personal incentive to get all that debt off the books. Yeah, facts. Okay, so I appreciate everybody coming through, man. I got another video I'm getting ready to roll into. Got 47, but I like the fact that even though we got a smaller audience, they're very engaged. I want to just tell everybody, man, you know, this year, 2022, take these markets serious. You may have to put yourself in a 2-year time span to get the success that you desire, but I want to really encourage you to take this stuff serious, right? Don't take it as a game, because I got a small channel on YouTube. The goal is to make the channel bigger. But we see one of the reasons why people don't necessarily go down this lane is because they don't get a lot of support. And it's easy to blow up on YouTube talking about a lot of other stuff. I'm going to keep doing this as long as I can, as long as it makes sense. But even if I'm gone, because anything can happen, the Lord can choose to call me home tomorrow, and that's just how that's going to work. I want to really encourage you to take some of the stuff that we talked about it and implement it amongst your own groups and figuring out how you can build up off of it. Because we have the solutions to a lot of our problems, but we may not be aware of it. And if we learn about these solutions and we don't try to get there overnight, it can put us in a position to be successful. So that's going to be it. David W. Will, also known as Diamond Dave. I appreciate everybody for coming through. Be safe this weekend. Talk to you later.